Good morning, everybody. We write Thursday, 31st of July, 2025. Welcome to another Flow Show. There is loads to go through, so I will be trying to keep it as condensed as possible, so we have time to look at what's still to come and enough charts and rates and whatever's moving and shaking there. Before we start, our usual goodies and trailers. You can still sign up for this 40% discount on your monthly subscriptions. That is still ongoing, and you can still always and just put your name down if you haven't done already, and your email address to keep being updated on all the changes that we regularly make, and our trading analytics platform, Forex analytics platform evolving into trading analytics. Only need to do it once, no need to do it several times. Once you are on the list, you will be there forever, and you will be kept up to date of everything that is coming up. Right, let's get into whatever headlines there be. Let's start with everything that goes on the trade side of things. So yesterday, Trump already gave us quite a lot of insights and a new deal. By the way, they signed a deal with South Korea on the basis of the 15% tariffs. On the other hand, he was not happy at all about what India is up to, so he slapped 25% on them. What did he posted there? He said something specific on India, and also saying that he wasn't happy about what they were doing with Russia, saying that if they want to continue with their double dead economies, let them do. But he's not happy about them at all. He also sent one towards Canada again. He posted on his Truth Social platform saying that, whoa, Canada has just announced that it is backing statehood of Palestine. That will make it very hard for us to make a trade deal with them. Oh, Canada, he says. Um, that, of course, had an impact as well, together with what we'll be looking at just a little later on the Bank of Canada, but the Canadian dollar is suffering a little bit as well on the back of it, because now the market is not really expecting an immediate trade deal with those guys. By the way, he also said that he will be announcing other stuff today on the 1st of August deadline. We'll be announcing perhaps one or two other smaller deals, but he could also come out and slap some additional tariffs on those who don't want to really give in to everything that he's asking for. And there's one in particular, well, besides Canada, of course, which is their closest neighbor, but there's another one in particular, also part of this USMCA agreement, and that is Mexico. And the Canadians have a delegation in the US, I think, today as well. But also the Mexicans were there yesterday. They will be there today again. And Scheinbaum is expected to have a call with Trump today. So for everybody who is trading Mexican peso right now, just be aware that we may have some headlines coming out, and just they could be positive or negative. There is some stuff going around. If tariffs would be kept like they are today, there is a part of the goods that flow from Mexico into the US under the USMCA agreement, which are not tariffed right now. But it's going to be very important to see whether that's going to be kept, whether he's going to tariff everything, or whether he's going to give Scheinbaum a pass, and telling her that they can do a deal perhaps under those 15 rules before the complete revision of the USMCA, which is expected somewhere either later this year in fall or early 2026. That is still open for when they will really rediscuss the USMCA. So that is something that we are watching for now. Um, Besant, in the in the meantime, before coming back to Trump, he came up and he said that actually people shouldn't panic if there is no deal on the 1st of August, which is tomorrow, because they can continue to negotiate. I think that was a bit of a double message. Um, One, two countries who are um, yeah, really nervous about having a deal or not with the US, or not knowing how much they will be paying, and also perhaps a message to markets saying that the don't panic message, don't just go panic in the bond market or whatever. It's not all over if there is not if there is not to be a deal straight away. Back to what Trump then did yesterday. All of a sudden, he came out with that with an extra bit of wisdom on those copper tariffs. That he said that he signed a proclamation to address the effects of copper imports. It imposes the universal 50% tariffs on imports of semi-finished copper products and copper-intensive derivatives, effective tomorrow, 1st of August. But then he added that the input materials in copper scrap are not subjected to the 232 or reciprocal tariffs, and the copper market went absolutely berserk. US copper, not the LME copper, US copper collapsed a full dollar from 5.5 down to 4.5 in one go, then went back up to 5, and then now we are trading even lower to 440. So there are, so to speak, more exemptions than really tariffs, if we can look at it in, let's say, a simple way, meaning that copper just collapsed back to where we were before the whole tariff thing started on copper. So that was a bit of a bit of a panic moment in the U.S. Copper market there, for those who may have missed it. Furthermore, on the tariff side of things, we had also um, one happy camper was the BMW CEO, who welcomed the US EU agreement, says that finally there will be a bit more stability, and it seems that BMW is okay with paying the 15% tariff. So one of the very few worth a mention who is still relatively happy with this deal. Further east, much further east, in Japan, Japan's Muto, he came out with a bit of a line there. It may or may not have affected the yen today, but I think it actually can. I've already been talking about that. Do we have clarity on this US-Japan deal? From the US side, seemingly yes. From the Japanese side, a lot less, as we've already seen over the past couple of days. And Muto came out overnight or early this morning. He says that they won't hesitate on additional tariff countermeasures if they are not happy um, with the deal that the US is putting on the table. So, as I said yesterday, we want clarity. Well, the only thing clear is that nothing is clear yet. And with US, between US and Japan, it still seems a bit, there's a few tensions there. Let's put it mildly, okay? What else has there been? China. China yesterday came out saying that they actually had pretty good talks with Sweden. Um, about joint trades and cooperation, etc. Um, a bit of a surprising statement there. They said they have strengthened trust between the two sides and boosted confidence in resolving economic disputes via discussions. And that was actually a Chinese official newspaper that came out with that line. So this is perhaps one to follow for those who are who are trading candies, because could end up being a bit of a double-edged sword there. I'm not sure that the European Union, who are the main trading partner with Sweden, are going to be extremely happy with that. But on the other side, if Sweden can find some sort of agreements with China, the Swedish krona may actually like it. Now, this being said, don't forget geopolitics, okay? Because between Russia and Sweden things are not great, and China is a Russia supporter. So we are never sure what is the exact meaning or the exact aim of this China approach to Sweden, right? What else did we have? I think I'm sort of done on the trade side of things, what I made a note of. Yeah, the US and China, they came out of their meeting agreeing that they will decide on our next meeting. Positive, but it's nothing is done. Nothing has been decided. Just some kind of decision that they will continue to talk, not more than that, really. So nothing is done between the US and China on the trade front. All right, what else happened? So we had this quarterly refunding in of the US Treasury, and as mostly expected, they went max. Besant and his crew went maxed out the short term, the bills. Auctions, they will get ramped up, and gradually amounts will be lower in the long term. It was all kind of as we may have expected, and we were musing about that yesterday in the trade in our trade forex analytics room. That actually, where he was completely against what Yellen was doing towards the end of her tenure as U.S. Treasurer, he's actually he's doing exactly the same, basically, shortening all the maturities for as long as rates stay where they are. And I guess once Mr. Powell will finally have decided to press the button to lower rates, then we may gradually see a bit of a change in the length of maturities that they will see. But for the time being, increased in well, kept the same percentages and stuff in bills versus notes and bonds, but I think we may expect, actually, because the limits have been increased, so we may expect perhaps bit of adjustments where they could actually do a bit more, but it's all going to be concentrated, or most is going to be concentrated on the short-term bills. Okay. um what else? Let me just quickly look through the notes that I made. Yeah, okay, let's move over to the central banks here, because that's been really the big. No, you know what? Let's quickly run through the data, and then we'll do the central banks, because that has really been the centerpiece of everything that was going on yesterday. So we had this ADP, as we were saying in our room. You can't really bank on that number. As we have seen, we have NFP tomorrow. As we have seen on prior ADPs versus NFP, it's very NFP. It's difficult to stick a number or an outlook towards the NFP data on the back of the ADP. But anyway, there's been a jump, and the jump was pretty much global. We have had the core PCE, then we had the GDP here, and actually it was a decent. If you look at growth, if you look at growth versus prices, it was a very decent report, because they printed a 3% growth versus a much lower prices. But then straight away we had to add that this number is still very volatile. And Mr. Powell himself during the FOMC press conference said exactly the same. So whatever happened Q1, Q2 could still be was still very volatile, and we can hardly bank on this to continue. But anyway, on the face of it, it was all really good, and it certainly helped the dollar on in the FX market to just keep the bit tone until we had the FOMC. Okay. Um, then we had a bit of home sales, whatever. We had a pretty big build in the oils, but as I already said on the API yesterday morning, it seems that the oil market is trying to trade different stuff like the Russian deadline, the oil cap, and things like that. Um, Maybe this one, once things stabilize, will have a bigger impact again. Okay, because yesterday when this number came out, we had really literally very little impact straight away. Maybe I don't know if it even impacted at all. Maybe a couple of tenths of a buck, but it did not really move the markets too much. Okay. Um, this morning we had. Yes, Fred, I will of course comment on the yen today. There are some pretty important moves going on there. We had the numbers in Japan as well. Industrial production, it is relatively volatile, but it is a relatively it is better than what was expected. But again, they always foresee whether it is a pretty high number for the next one or a low one. This time they thought it was going to be a low one, but it's a high one. These industrial production numbers, it depends on those on those heavy machinery and stuff, and from one month to another, it is really it can really vary quite a bit. Okay. We had some Australian data in pretty good, very good building approvals there on the month on month, year on year, but then base effects and stuff. I don't know exactly how we need to read those year on year. The month on month were pretty good. Import and export prices went a bit down. Now, it could be seen as negative for what's to come as well in the next CPI or so. But then we had comments from RBA's Hauser overnight he said that the CPI was a very welcome data, but we should not um, call them. What did he say? We should not call them superb or outstanding, and they still need to be cautious on interest rates. Okay. We had a bit of an improvement there on the retail sales as well in Australia. And then finally, we are going. Oh yeah, we had the manufacturing PMI in China. So the dollar China is actually trading back above 720 as we speak. We are getting into a bit of an interesting zone there, and the longer that uncertainty continues to hang over the US trade with China, the dollar doing what it is doing right now, there is a possibility that we are going for maybe a quick look in that dollar China through that 721, 722 perhaps. So this is one to keep an eye on, depending on what the dollar is going to do for the rest of the session, and especially, I would say, tomorrow. Okay. Um, what did we have else on the data today? Yes, we had the preliminary European CPI data. Bit sticky in France, but nothing really to really get too excited about. Same thing for the German numbers, but we first of all had a relatively okay unemployment rate, but we had the German regional states out today, and as you can see, a bit overall, the month over month was quite sticky, but then the year over year is kind of hanging around where they were before. Even in Saxony, the year over year came down quite a bit. So all in all, I would say call it a mixed bag. And again, on inflation, ladies and gentlemen, we will have to see exactly how inflation will evolve once we get those tariffs in place, etc., etc. I am going to say that yes, inflation is always going to be very important because it is part of and the biggest part of the ECB mandate. We also see on the Bank of Japan, it's a big part of their mandate. But there's other things that are going to be main drivers up to when we will see really clarity on the impact of tariffs, etc., on the inflation side of things. So I'm not going to say you have to disregard it, inflation right now, but be careful to overreact on inflation. And we have seen it again today. People, euro went up a little bit on the back of those German month-over-month inflation, but then it's already losing steam again because the market is still trading a very big dollar, obviously. Central banks, yay, here we go. First of all, Bank of Canada. And that was a bit of a shite show, shall we say. They just were discussing the several scenarios. They don't know where they are, and actually they will just act or react or not have to act depending on the trade deal. So they're coming up with several scenarios. First of all, they were um, thanks, Brad. First of all, McClem is felt a bit miserable about growth, about exports, etc. Also thinking that it's not ready to revive yet, and obviously taking the um, the uncertainty surrounding trade as the main driver of this worsening growth, export, and activity scenario. Is not wrong, obviously, on the back of it. But then the rest of the statement, the rest of the press conference was all about if this happens, then that may happen, and if the opposite happens, then the opposite will happen. And basically, that was it. It was not really helpful for the Canadian dollar. Okay, we had some slight positive on the Canadian dollar at one stage when I actually don't recall whether it's Trump or Besson who said that there's still an open door to discuss Canada, but then Trump quickly on through social killed that, and gradually the Canadian dollar is weakening. Okay, then over to Mr. Powell, and there's a couple of things to say. First of all, when the statement came out, it was not as, let's say, stubborn as it was before, because in the text itself, and I'm just going to go back to have just to make sure that I'm not saying anything stupid. In the text itself, there was a bit of a change in tone from growth of economic activity. In the prior statement, it says has continued to expand at a solid pace, and now the new line um, was that it has moderated in the first half of the year. Okay, so then it says the uncertainty about the economic outlook has diminished in the prior. In current text, it just says it remains elevated. So we could have thought that that was a little bit of a, oh, here they are going to prepare us for a September cut. And that lasted what? 1.5, 2 questions over the press conference, and then Powell went back on saying like, well, no, everything is still going as expected. Nothing is falling out of bed. We don't know whether the inflation shock of tariffs is going to be one-off or that we need to monitor it for it to be more long-lasting. So when the door over the statement got thrown open for us, the markets it actually got gradually closed as the press conference went on. So the market started to buy dollars again, which continued well into the end of the in the U.S. session, rightfully so, because the hopium for a wider door in September has been quashed again. But then there was, and I think there for what's going to happen tomorrow, I think the very important line came at the back end, and he repeated that a couple of times. He came at the back end of the presser and saying like, inflation is what it is, growth is what it is, and growth, he said himself that growth could be jumping around a little bit because of the uncertainty. He gave us again today also PCE numbers, which should come in 2.5 and 2.7%. Where are we expecting it here? The PCE index, he gave us exactly those numbers, what the expectations are. So who are we to doubt his data? Because over the last 3 or 4 sets of this core PCE was wrong for once for 0.1%. So I think we can safely say it's going to come out there. But then the more important thing was that he said job report, labor report, unemployment rate. That is what is now on the top of their watch list. So, and I've been saying that already for a number of weeks, even months. But finally, it is now confirmed that whoops, what is happening here? It is now confirmed that growth jobs are on the top end of their watch list, and that is obviously going to be extremely important for tomorrow. Between now and the next FOMC meeting, there are two jobs reports to come, so they will have ample information before the next FOMC meeting, okay? But we will also have, towards the end of August, we will also have the Jackson Hole meetings, right? So, and over there, if we would see some weakening already tomorrow, it is expected to show a little less, a bit of a give back already there. But if we would get a worse than expected report tomorrow, I think the market will have to revise a little bit of what we have done yesterday and what we may still be doing today. Okay, for the dollar. The dollar is really still very big. We have seen some corrections, but really we are staying at pretty lofty levels. But I can't stress it enough. Really, it's going to move on the jobs reports now. Okay, so just be very concentrated on what's happening in the jobs market, NFP numbers obviously, but watch out if ever this unemployment rate is starting to move higher. And it's in my personal opinion, it's not going to have to rise 0.5%. Okay, once we start to hit 4.3, 4.4% or so, we may already have a bit of a change in rhetoric when we hear from the Fed members once they will be starting to babble again. Okay. Woof, that is it. We are through. Oh no, that's not it at all. Bank of Japan. Bank of Japan. Rates unchanged, and UEDA then they actually revised their inflation forecast higher from 2.2 to 2.7%. But then at the same time, Ueda was already talking about that the underlying inflation is not yet stable or high enough for them to hike rates. Joao, Ueda is a new Bailey. Yeah. Actually, that's not a bad comparison. Whenever he speaks now, the yen is going down. So the underlying inflation is stalling, and the other negative thing that he said was that the outlook for growth, the risk is still negative. Okay, so once the market was kind of expecting for him to throw the door open, perhaps. It's nowhere there, and I think they are trapped as well right now for as long as this deal between the US and Japan has not been signed. He did say that the risk of a sharp downturn on the back of tariffs is receding, but then at the same time, he also added that he wants to see a continuation of the positive cycle of wages and prices. Okay, so I mean, always finding a good excuse not to have to raise rates, and they kept the interest rates at 0.5%. That is also a factor between the weakness of the yen. Okay, I mean, yen is still not a high yielder. All right, and yen has been, let's say, not really the good risk indicator any of late. Yeah, we could argue that today equity markets, thanks to extremely good performance of the Nasdaq on the back of Meta, etc., is positive risk. But then we don't really find it back in other real risk currencies, euro commodities. They are going up and down and then back in the middle. It's really a US equity thing, a Nasdaq thing, S&P thing. The yen is not really your best currency to express risk, although today it runs in parallel, but we had to wait post Bank of Japan. All right, it's high time that we look at the charts. Okay, dollar yen just before the I'm going to go on a shorter period, shorter time frame. Just before the Bank of Japan, into the Bank of Japan, we had a bit of corrections globally in the dollar. We had a bit of uncertainty. The market getting out of a few probably overload of positions, etc. But once the Bank of Japan was over and during already Ueda's press conference, we really started to ramp higher again. Okay, if you look at this is when Ueda started, and that is his press conference and the result of it. Okay, we are not done, I think, with yen weakness. All right, there's those two things. It's the Bank of Japan not really helping the yen. Three things actually. The dollar already being strong on its own, and then you add that still that uncertainty, those big investments in that Japan will have to make, and those big purchases from the US, it's still not a picture that is positive yen for me. So we are nearly there at 150. I think we can actually, unless something, and then I'm thinking rather about tomorrow than today, about the US jobs report, which will be a risk factor. But in the meantime, unless something really strange happens with the dollar when Trump will announce later on whatever he's going to do with tariffs or something, or he inflames Truth Social again with calls for Powell to hit the exit. We are on our way, right? And I think we could really reach for this 151, 152 again in the very near future. This is what I think that is really going to happen. Joao, Japan CPI tonight. We just had the BOJ. If really everything comes out, let me just quickly get back onto the calendar. Yeah, the Japanese CPI is coming out. No, it's not. It's the unemployment rate, mate, and manufacturing PMI. Okay, coming out for Japan. There's no Japanese CPI tonight. And anyway, we had the Bank of Japan. I mean, we heard everything that we need to hear, but it's just the underlying inflation and wages, and then the trade deal, which are going to be important. But again, as I said, it's in the cards. I think we are going to really go quite quickly up there. Um, Shame that I didn't want to have too many dollars in position, so I'm actually haven't ridden this long dollar yen train. But what I did do though is since I wanted to keep kind of away from the dollar for maybe a little bit because it's end of month as well. I don't really know what's going to happen. I did re-enter here, and we had a pretty nice retest of this wedge in Kiwi, and that one happily I loaded up on it this morning. Very early, even before Ueda spoke, just after the Bank of Japan results. I think this one has another give and take half to 1% to go on the top side as well, which is going to coincide with dollar yen, but it's probably going to go slower than the dollar yen, seeing that the dollar is still very bid elsewhere. Okay, euro dollar. I'm just reading through your comments. The rand Thando, we spoke about that already yesterday. Thank you for your question. It has impacted the rand obviously, because it does mean that US is not ready to give South Africa a great deal because he was saying that he did not have a good feeling about South Africa. It's a BRICS thing, right? Because now we see that he hammered India as well. He hammered Brazil. He's not happy with South Africa, and he doesn't know what to do with China yet. So you take the BRICS, and that's where the whole issue now lies. And yes, that definitely has impacted the South African rand. Besides the already strong dollar, South African rand really got hit on the back of it as well, and I think it may actually continue. I'm not going to chase it, but I think the South African rand should remain on the defensive as well. Okay, euro dollar. We had a bit of a recovery this morning, but a shallow one. In this 114.40 50 zone. Yesterday, before we came there, I thought it was going to be quite important, but in the combination of that GDP and the FOMC, the market is really pushing now. They're already starting to price out pretty much, not pretty much. They're starting where we were at 65% or so for the September meeting for cutting rates for the FOMC. They have gradually reduced that percentage now to well below the 50% mark. And I haven't seen the latest number exactly, but there's already talks doing the rounds that if the numbers don't collapse and inflation holds up, that we might not have a Fed rate cut at all this year. But I think it's far too early to call that. I want to see those unemployment data first. So we went 114.40 50. It's not holding, but we are just below. Okay, we're trading like around 35 right now. Data, obviously, but month end as well. We will see what month end brings. With this really big ramp higher in the US equities from last night and holding up this morning as well. It may be that there is a little bit. Why is this happening? Oh, why did I lose my euro dollar here all of a sudden? We may see a bit of more corrective activity in the dollar, but looking at the strength of the dollar, any dollar sales that may need to be done, yeah, we could correct a bit more. But I guess they before tomorrow they make it swamped in rally sellers. Okay, I mean I'm not out of it. I'm not going to say we can't break those lows. Obviously, we can break those lows, but perhaps into tomorrow the market will think a little bit more. But does it warrant a bigger retracement than up to here? I doubt it for now. So I'm going into today more with a kind of a rangy feeling, but with still a very strong dollar bias in the short term. Okay, until we get to tomorrow. Cable, we saw exactly the same thing happen. We've broken under the 135 132 and a half support. Sorry, we went down to 132 and a quarter-ish. We are nearly back there. We tried to correct again this morning. We actually ran above. There's, in my opinion, and yesterday we saw it on that euro sterling as well. There's quite a bit of a yo-yo going on in euro sterling. I think there's some month-end stuff going through on euro sterling, which can disrupt the picture a little bit on the cable. Um, hang on just a minute, just a sec, please. I'm sorry about that, guys. I just needed to take this. Sorry for the interruption. So on the cable, we are already back down to 132 and a quarter. Uh, Keep an eye on just low 132s here, okay? But looking at how the dollar behaves, I would be really surprised if we can get back above corrective levels, which lie around 132.95, 133, unless the market is really running heavily short, long dollars and short all pairs. It's going to be a bit of a tough ask because I think even technically there's going to be people waiting for a bounce and to perhaps re-enter. I hear a lot of people saying, "Oh, give me a correction in the dollar, and I'm going to start to buy again." So any moves up to closer to 133 would be a surprise, and perhaps not only for me, would be a surprise if we go through, okay? Tomorrow is a different story, right? But for today, perhaps the market is not yet ready to really start to think about what if the jobs report is a bad one, okay? So for the cable as well, I think um, corrections maybe, but the risk is still there that we are going to see 131.40, 131.20, okay? On the We have to look at what's happening on the dollar CAD. The dollar CAD is now in the process of going. Okay. Yesterday I said 137.80, 138, 138.15. What's going to happen? Now we're over the hump of um, the Bank of Canada. We are over the hump of the FOMC, and it is really working, doing a job of going for the break. And I know that Blake has a double top, which points to 140 and a half. Um, I'm usually one that going next step by step. The next step is 139 and a quarter, 139 and a half, I think, on the dollar CAD. For as long as we stay above this 138, include 137.80. Okay. If we get back below 137.80, that is probably meaning that either we got a very bad jobs report tomorrow, or there is finally something happening on a deal between the US and Canada. And I'd rather say get the deal between the US and the Canada than a bad jobs report in the US, because if it's only smalls weaker, maybe the market will try to sell, but then we are going to find deep buyers, I trust, in the dollar. But we'll talk about that tomorrow, if we're still above here or even a bit higher. But for now, it's looks to me like a grind higher. Okay, this dollar Canada, it's probably going to hold and try to reach for the 139. All right. What else? Dollar mix. Okay, dollar mix. It is trying to go. We've had this 1884, then we had this 1888. We saw the 1888 again. We are somewhere in the middle right now, 1885. I said Mexico, they are talking to the US. Watch out if there's no deal, okay? Watch out if or if Trump on the contrary says like, no, I mean you're not getting any preference treatment. It's you're going to go with all the rest, or even worse than a 15% or so, the keeping the 25. that is in the pipe right now, then we're probably going to break this and trade back up, perhaps even above 19, towards this prior, this box prior where we had a lot of activity in the past as well, 190520. If in turn we get a deal, then the market is probably going to think back. I'm not sure whether the dollar versus the Mexican peso is going to be the best instrument, but perhaps something like Mex yen or so, or Euro Mix is probably going to go down. But then we're probably gradually going to go down to 1870. It's an interesting enough day today for everything happening in the Mexican peso to keep a very close eye on what's happening in the Mex today. Okay. Um, just looking at the clock, I think for today that may be enough. Oh, just maybe a couple then. Kiwi, we have broken like different patterns, but similar price action. The euro dollar, we've seen the cable break. Kiwi also broke. Okay, Kiwi broke the channel that is around 59.15. We're trading back below right now, shyly. Okay, but we can't rule out a move lower for as long as the dollar remains extremely big, down to 58 and a half, 58.45 ish. That is not to be excluded. Tomorrow may be a different picture, but today I think if we see any retracement, 59.40, and I think if ever we would see 59.65, 59.80, that's probably going to be the best we can squeeze out of any long squeeze on the dollar, short squeeze on this pair. Okay, the the Aussie also broke down, and we came to the 78.6 of the June-July rally, and we bounced from there. That's at 64 and a quarter. We're still trading a bit above there, but again, it's broken, right? So for as long as we're below 65, the overall picture has to be kind of negative. We can range a bit, okay, around maybe 64, 55. 64, let's say 64, 60, 70. We could like use it as a hinge or a pivot on the day. If it goes above, maybe retrace a bit more. But every dollar pair is showing pretty much similar. Okay. Then the yeah, every dollar pair is showing the similar thing. We are in a process of breaking. We can see it on the metals as well, although so we have gone down. We confirmed here very strong dollar, took gold as well through this 85.90 level 2. We went then down closer to try to make an approach on the 32.45. Remember what I said, 32.45 is my level. But then surprisingly again, gold is jumping again, okay? And I find it slightly surprising. And it happened again, this time in the Asian time zone. So we need to pay attention again to what's happening in the Asian time zone. Told you yesterday, yeah, the Chinese were going out of gold ETF, so they haven't been buying for a long while. But if there's no agreement between the US and China, and they see the dollar China starting to pick up again, maybe they are going to start to pick up those hedges again. So let's again watch what's happening in gold in the Asian time zone. Perhaps this afternoon it's again going to be a dollar thing, and we may see it back down there. But really, I find it always very interesting when this happens. So. Um, I'm not going to sell in it, but I may try to see what if they come back in again tomorrow. See if there's anything to do if we get back down here for perhaps trying to get my butcher's glove out and start to buy. Silver also broke the channel pretty hard on the dollar. We're already through the next line of support. It did hold overnight the 36.80, but it is coming down. I said on my morning updates in the room and in our Forex Analytics basic tech that it's possible to go and have a visit low 36s. but then we are here in this, we are now entering it, a big traffic zone, okay? And for as long in the long term, in the longer term, for as long as we are above 34.85, 35.15, the global picture, take away this channel, the global picture to me remains bullish for as long as we are above 35. So I'm going to start to get interesting. Get that dollar, give an extra push, and then we will see what happens. Low 36s, high 35s, perhaps. Okay. I again, same as in the rest, I doubt that we make it above 37, 35, 45. It would be a surprise today. So anywhere there, I suppose we are going to find resistance. And with that, ladies and gentlemen, I'm calling this a flow show for today. Thanks very much for your presence as usual. And we will talk to each other tomorrow to have a look at what's happening with that US jobs report. Thank you very much. Have a good day, all.